guys, good morning. Welcome to the live session of Stocks Sniper Trading. My name is Dave, guys, my partner's Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hello, welcome everyone. Welcome to Stocks Sniper Trading. My name is Ron. My partner is Dave, guys. Welcome, guys. It's just after 7 p.m. Eastern, and it's Wednesday, December 11. So, guys, we're gonna continue with our Wednesday weekly webinars, and today we're gonna talk about the U.S. dollar and DXY, the index correlated to the US dollar. So we'll talk a little bit about it. I know you guys are talking about it. Maybe you're trading it, but we will talk all about it. I understand that all of you guys know what the US dollar is. If you don't know what the US dollar is, then you're going to learn a lot today. But I'm sure some of you guys know exactly what the US dollar is. Some of you guys have it in your pockets right now. You got some US dollar bills in your pockets. And specifically, we'll talk about DXY and what DXY is, what type of index this is, what it's correlated against, and we'll talk all about that. Okay, guys? Before we start the webinar, I just want to go over like the markets, just what's going on in the markets, because I haven't been on a session with you guys. It's been some days now. Also, just to let you guys know, we're gonna have a live London session later tonight. So right after this webinar, we're going to get some sleep and we'll be back, maybe let's say 2:30 a.m. Eastern. So 45 minutes right before London market opens up. We'll get in, we'll do some analysis. Maybe we'll do DAX. We'll look at the German index. We'll look at maybe gold, see how gold's going to trade London and then move into New York. So that will be later tonight, guys. So join us. You'll have some fun in London. We'll see how the volume is. Ron might be a little bit sleepy on the call, but I'm going to get up. We'll brew some coffee and we'll be here. It's going to be really early for me, 2:30 a.m. Eastern. So hopefully Ron can get maybe 2-3 hours of sleep. We'll see. If I can't sleep, guys, then it's going to be an all-nighter. And maybe I'll start it earlier, okay? So that's why, please, guys, hit the notification bell on YouTube, and you guys on Zoom, make sure, because I'm very spontaneous. I might come in midnight, 1 a.m. If I can't sleep, we'll start at midnight, 1 a.m., and then we'll go right till 5. So it's scheduled for a London session, but all depending if I can get to sleep or not, then we might run it early, okay? So I'm not going to hit the record button yet. And that will be when we start the webinar. So I'll allow more snipers to get in on Zoom and on YouTube, and we'll go from there. So, guys, first thing is the calendar. There was some news today in the markets. You guys have already been trading it, but we had US CPI, so that's inflation data. That affected the US dollar. What we're going to talk about today in our webinar. So 3 back-to-back red folders. You got your core CPI month over month, you got your regular CPI month over month, and then you have your CPI year over year. So that was this morning. Also here, I'm in Canada. Bank of Canada announced their overnight lending rate, another 50 basis point decrease. So remember a couple months ago, Canada here was at 5.5, and now we're down to 3.25. So variable is going down. Fixed rates, they'll move with the bonds, but that's a lot. That's a big decrease quickly in the Canadian dollar. The Canadian dollar is depreciating, like right now as we're speaking. They're trying to avoid a recession. That's why they keep decreasing the Canadian dollar over here. How will that play out in the markets the next few weeks? Time will tell, but this is big decrease. So this was all in Canada this morning, and then Bank of Canada had press conference. And then tomorrow, guys, just really briefly, tomorrow, let's go into Thursday. There is some Swiss news, so we will be trading this. We'll watch the European markets later tonight. They also have their policy rate, a 0.25% decrease is the forecast. And then tomorrow, US 8:30 a.m. Eastern, our North American news. We had CPI, that's consumer spending, and then tomorrow will be producers, PPI, and then our weekly unemployment claims tomorrow. Okay, guys, so be careful trading tomorrow. Markets are fun right now. Gold is moving, Nasdaq is moving, Dow Jones is moving, US dollar is moving, Bitcoin is moving. Lots of fun things. Tesla is unbelievable right now. MicroStrategy, guys, I'm flipping MicroStrategy every single day. If you like volatility and you like price action, check out MicroStrategy. This thing is fun. If you're looking for 1 to 2 to 3 to 4 to 5% per day, it's got some crazy swings. Scalpers, we love volatility as long as you're trading with proper risk management. I got a couple webinars coming up on MicroStrategy. I'll show you how I'm trading it and things like that, and we'll talk all about it. Okay, so I'm really excited to start to get into more stocks, options, talking about actual securities and not just Forex. So, but I want you guys to learn what is the US dollar, because when we're purchasing these securities, we're using the US dollar or your base currency where you are in the world. But we'll talk about the US dollar as being the world's Federal Reserve for currency. Maybe in the future, digital Bitcoin is going to take over. Who knows? If Trump starts that, the Bitcoin reserve, we'll see if that's in the news. Guys, earnings tomorrow. We've got not much going on pre-market, but after hours, there's a big name some of you guys are familiar with. Costco tomorrow after hours, 4:15 p.m. Eastern. Costco it's trading near all-time highs up here. Costco. So they report. If you do trade Dow Jones, it will affect a little bit the index over there. Okay, guys. And then just continuing over here, if you want to join the team, we'd love to have you guys on the team, stocksnipertrading.com. Visit our website. We got free blogs for you guys right over here. Come to our website, click on more blog, and these are all free educational blogs, tons of them here. I promise you will learn something on each one of these blogs. Right over here, this was our gold trade success, 150 pip trade with our trade idea, a breakdown of it. Showing you kind of the before after look of it, also types of entries, anything over here. Okay, anything you're looking for. What are liquidity sweeps? You probably hear a lot of traders talking about sweeping the liquidity. What exactly is that? We kind of break it down here with they're short, they're sweet, they're nice educational blogs. Okay, and if you want to join the team, we'd love to have you guys on this team. We got a free Telegram link. It's pinned at the top of the YouTube channel for you guys. It's right over here. So this is our YouTube videos that got posted. Over here, trading with Dave in the morning, destroying gold over here for 130 pips, and everything we do at SST here. This is our New York sessions with Dave again, killing it over here, guys, on gold. Members in the group, in the Zoom, congratulations to everybody. Sean, Forex Borex, Bonnie, Efren, Sonia, Scotty, congrats, guys. All the success we're seeing here with all of our snipers, it's truly it's amazing seeing this, guys. This is what we work hard for here at SST. We work hard here for you guys to be successful. So we try our hardest here at SST, not just Dave and I, but we have an entire team behind this. So everyone here is going to, let's go in with positive attitude. Everyone here is going to be successful. If you're struggling, all traders struggle, but it's overcoming those struggles and working hard at fixing your mistakes, and you will get it. You will get it. You will get it. Just keep telling yourself that, but just proper risk management and mindset, guys, and then the rest you will get, but it takes time. Okay, guys, it's going to start with tonight's webinar. We're going to learn what is the US dollar and DXY, and it's a two-part webinar. Okay, so first we're going to talk about the US dollar, and then we're going to transition, talk about the DXY index. So when I finish off the US dollar, if you see a conclusion, don't leave us, because we got a part two, and then I'm just going to talk near the end about the actual DXY charts. Then we'll get off a PowerPoint presentation and we'll talk about the whole outlook of the charts of the US dollar, how it's been trading since the 1980s till present time. And we'll talk all about it. And maybe you guys can remember what happened in the mid 80s, what happened in the 90s, early 2000s, 2008. 2020 there was something that happened, and present day where the US dollar is. So I guarantee you someone will feel something, will know something. I don't know too much about the 80s. I was born in 82. I don't know too much about that 1985 crisis around there. I read a lot about it, but to actually witness it, I was only 3 years old. But I'm more familiar with what happened in the 2000, 2008, all of those things. And some of us understand how the world moves, and you guys can strengthen your trading for the better. But we have to understand what is the US dollar, because that's what makes the world go round. Okay, so I'm just going to hit the record button in just a moment. How's everybody doing tonight? Welcome, guys. Everyone on Zoom, thank you guys for joining. Appreciate it. Bronson, David, Kenny, Lorraine, Ricardi, Rhonda, Sally, Sani, welcome. Val, thank you for joining. Everybody, guys. If I missed you guys, Wayne, thank you guys all for joining. Court, welcome, guys. Appreciate you guys. Hopefully you guys are having a great evening and ready to learn something new tonight. And everyone on YouTube, guys, appreciate all of you guys as well. Rich White, happy Wednesday to you, brother. Thank you for joining. Frank, welcome. Michael, thank you for joining. I appreciate you, man. Jeremiah, welcome. Thank you, guys. Michael, I really appreciate that. No better place than here. It might be late for some of you guys, so I really do appreciate your guys' time. I know for some of you guys it's really, really late, like midnight, 2 a.m. right now. So I just want to personally say thank you guys for joining. It really means a lot to me. I know it's not the greatest time we do these webinars, but they are recorded. We will record it and upload it to the website. So if you got to miss a little bit, or you got to take off, or you're just not here, they will be uploaded to the website for you guys. Okay, it's part of our entire series that we're doing about the super systems of trading. I want to take it piece by piece by piece, and so we understand everything, the whole macro of the entire markets, not just a candlestick. We talk a lot about candlesticks here, but we want you guys to understand the entire broader picture of the entire markets. We're going to break it down slowly, webinar by webinar. So I love it that you guys are here, you're engaged, and you're ready to learn. Okay, and if you know about the US dollar and you know exactly what the DXY is, that's perfect. Then you got a little bit of a background understanding, and I'll try and help you to take it a little bit further. Okay, so what I do in these series is there's a theory part. So the theory is kind of like the PowerPoint presentation. It's all theory. And then what I'm doing is once we get about, I don't know, 50 to 100 webinars in, then I'm going to start the opposite side. We're going to do the practical side. So I can take each one of those individual webinars that we learn theory on, and I can take it right into the markets, and we can go live and I can teach practical on it. So I want you guys to learn theory first. Just like if you guys go to school, if you're in college or university, they teach you theory. You got to read the books. You got to read, and then they put you, when you graduate, you go into the real world, and everything that you learned through the book, then it goes into real life. So same thing that we're going to do here. We're going to treat this as if this is a real education, which it is. It's a financial education without those heavy tuition fees. So none of us here are paying $5, $10, $20, $30, $40,000 a year to learn. Here it's free. You just got to subscribe to our channel on YouTube and learn something every night with us. Okay. So I appreciate all of you guys. Everybody, if I miss your name, I'm going to read them all out, guys, so I don't miss you guys. Mickey, welcome. Aken Trades, thank you for joining. Liverpool, Dom, welcome, guys. I appreciate that. Mickey, you just became a member of SST family today. Really looking forward to the future with you guys. I hope the future is going to be bright for you. Anything you need from myself, Mickey, or Dave, or anyone here, don't be shy. Shoot us a message, and we're always here for you guys. Okay, Gizmo, welcome. Ghost Boogie, welcome, bro. Thank you, guys. I appreciate everyone. Meldon, my man, thank you for joining. I appreciate everyone. Okay, guys, so let's hit the record so we don't forget that. Always remind me, guys. Always record is very important. Let me hit the record and let's get started. Okay. We're gonna try maybe an hour, 90 minutes at the most, so that we can rest up and we can come back for live London. Okay, guys. And we're halfway through the year, guys. We're halfway there. So we'll do a long call at the end of the year, kind of recap of how everyone's doing so that we can start 2025 off on the right foot altogether. There's exciting times in the markets right now. How can you not want to learn all about trading right now in the markets when you got US indices at all-time highs? You got Bitcoin driving 100,000 as I'm speaking. It's almost at 101,000. MicroStrategy, Tesla, Nvidia, like these big names, Apple, Amazon, Microsoft, Google. MicroStrategy might get to go in the queues in QQQ in that index this Friday. They might, guys, there's exciting times right now. If some of these big names start to just even allocate 1% of their cash towards Bitcoin, things can get crazy, guys. So I can't wait to look forward to 2025 and what can happen, guys. And we have an entire boot camp coming for cryptocurrency in the new year. Dave and I will announce that. We're just finishing it up, okay? So let's have some fun, guys. I'm super pumped to be here. Let's get into this.
Recording in progress.
Okay, welcome, guys. Thank you for joining our weekly webinar. Tonight, what we're going to talk about is what is the US dollar. So if you remember, guys, like taking this webinar by webinar, piece by piece, when we started this series, we learned what is a sniper. Okay, so we are stock sniper trading. Some of you guys now are familiar with what a sniper is, and a sniper is not just a scalper, like on the 1 minute or 5 minutes. A sniper can be a swing trader. A sniper can be an investor. You're just looking for those precise opportunities to nail your trades with minimal to zero drawdown, with precision, with a lot of like analysis leading into the trade. So there's a lot that goes on to that. So we started this series off with what is a sniper. We moved into, a lot of us snipers trade price action. So we talked about the history of price action. We introduced all of that. We moved into just overall what is trading, then what is investing. We talked about what is money, why like having the right mindset, the right psychology for money. Money is a tool to achieve financial freedom. And we trade this, and now we're learning about today, taking money a little further. What is the most important money currency in this planet is the US dollar. And how is it correlated with the DXY? What is the DXY? That's our US dollar index, and it's a basket case of how its overall rating, its strength and weakness against the other major currencies of the world. I'm going to ask you one question right now, right before we get into the webinar. The DXY, out of all of the other major currencies in the world, okay, what holds the most weight? What other currency? Like when the US dollar is compared to the Swiss franc, to the Japanese yen, to the Canadian dollar, to the Australian dollar, to the New Zealand dollar, to the British pound, to the euro, which one of those currencies that I just listed do you think is the strongest with the US dollar? Which one? Take a guess, guys. Out of those ones, what I just said. So I said the Japanese yen, I said the British pound, I said the Canadian dollar, New Zealand dollar, Australian dollar. What else am I missing here? The euro and Swiss franc. So out of all of those, which one you guys think? Come on, guys, don't be shy. I want to make these calls interactive. Let's go. Take a wild guess. I'll let you guys think about it and we'll get to it. So I see some of you guys are saying the euro, EU. I see some of you guys are saying the pound. Let's see. You guys might be surprised. And the percentage, okay, also. Okay, Val, the yen, Lorraine, the yen. Wait till you see the percentage. I don't know if some of you guys know. Okay, some of you guys are saying Swiss. I guarantee you, a lot of you guys, if you stick with this webinar, you guys will be surprised to hear this. Okay, so what is the US dollar? Let's just a brief little history. And I know you guys know what the US dollar is. Some of you guys have it in your pocket right now. Maybe a lot of you guys have a lot of US dollars in your pockets right now because you're taking your trading to the next level. And we got to take those US dollars out of your pockets and we have to invest it in something good so we can get our money working for us and making us more money. Okay. And then we'll learn a little bit the flip side. What is DXY? How it's correlated. Okay. Let's have some fun, guys. So what is the US dollar and DXY? So the dollar, USD, as it's abbreviated, is the official currency of the United States and one of the most widely used currencies in international trade. So this is everybody knows this, okay? This is not rocket science over here. Everyone knows the US dollar is the official currency of the United States. Okay, we all know that. And all of us know it's the most widely used currency in international trade. So think about it also when you're traveling. When you're traveling, you're going on vacation, a lot of places that you're traveling to, they accept the US dollar as opposed to other currencies. And it's accepted probably everywhere around the world, and it's also widely traded around the world. Okay, and you know that the U.S. has the Federal Reserve, and they can print this U.S. dollar whenever they want. They just turn on that printing machine, and they can print, and we're seeing a little bit of that right now in the last few years. That's what's caused a little bit of inflation around the world. It's because that's why it's more of a global inflation. It's not just an American inflation. When the US dollar prints and they start printing a lot of it, it affects the entire world. You'd think that it would just affect America because it's their currency. No, but it's heavily invested with every country around the world. It's traded, so they hold a lot of US dollars. So it can affect the entire world. That's why we need to learn a lot more about the US dollar and really dig deep into what this thing is. So here's a detailed examination of the US dollar, its significance and implications in global trading. So just a quick little overview. The history and evolution. I know when Ron says history, some of you guys fall asleep and they're like, oh my God, he's turning this into a history class. This is boring. No, it's actually fascinating to learn the whole history of everything. I learn more and I appreciate it more when I know the history of something. Anything. If you're learning the history on anything, it doesn't have to be trading, it doesn't have to be the US dollar, just anything. Like right now, if you want to learn more about crypto and Bitcoin, learn its history. Learn the inception of Bitcoin, when it started, why it started, the volatility it went through, the ups and downs and everything. Then you'll appreciate it more and more and more, whatever you're learning, when you understand the history. Okay, so I'm not trying to turn this into a history class, but it's good to know. It's good to know this for the future. It helps us. So the US dollar was established in the Coinage Act of 1792. Okay, so most of us were not born at this time, and became the nation's currency. So in 1792, the US dollar became the nation's currency. So it's not a young currency. It's pretty old. It's had a couple hundred years to be tested, and it's still around. It's still utilized around the world. The Bretton Woods Agreement. Okay, so this was a big time in history for the US dollar. The Bretton Woods Agreement in 1944 established the US dollar as the world's primary reserve currency. Okay, so this is when it started. As I started the call, I said that this is the world's number one primary reserve currency, and it started in 1944. So around World War II, around this time, 1944. The history buffs in here probably know a lot more about this than me, but 1944, and it's called the Bretton Woods Agreement. Some of you guys have heard of this. You guys know this stuff, okay? If you want to learn more and take your education further, then start to study a little bit about the Bretton Woods Agreement. Who were the big players in here? Who were the key notable names? And what exactly is this? And maybe you're going to learn something new, and you'll be engaged to learn even more and more and more. So the US dollar is the world's primary reserve currency, linking it to gold and making it a stable medium for international trade. So I know a lot of you guys on this call, Zoom and YouTube, you guys trade gold religiously every single day. Because I know when I start a live session, everyone's like, Ron, look at gold, 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 gold. So we got to know how the US dollar is kind of correlated with gold. Do you guys know that, right? We'll learn all about Nixon, how he played a role in this and everything. So it was is the primary reserve currency, linking it to gold and making it stable medium for international trade. So types of US dollar, we have the Federal Reserve notes. Okay, so there's two basic types of US dollar. We have the Federal Reserve notes. So this is the actual physical currency in circulation. Okay, so this is when you're holding that paper greenback, you actually are physically holding the Federal Reserve note. Okay, and it's a piece of paper. At the end of the day, it's just a piece of paper. Okay, so they can print as much of this currency, aka paper, as much as they want. Okay, and they have been doing that as of late. If you look at America's debt ceiling right now, how much debt they're in, it's due to spending, unnecessary spending, excessive spending, printing more money. So that causes debt. Just like you and I, when we get into debt, what causes us to get into debt? We get our credit cards out, and right now it's almost Christmas time, so it's holiday season. Some of us are going to incur some debt because you go buy presents and go holiday shopping and things like that. So this is thing about US has been Christmas shopping for the last 100 years without paying their credit card bill. So they're just excessive spending. And then you have your Federal Reserve notes, and second, we have digital USD. And this is becoming a little bit more increasingly relevant with the rise of digital payments and cryptocurrencies. So you can be old school like my dad and go everywhere and pay in cash, or you can be a little bit more modern and you can start to use digital payments such as credit cards, Visa, MasterCard, American Express, and now we're getting a little bit more into cryptocurrencies. So maybe some of you guys are hearing a little bit more about crypto as of late. But yes, there is countries right now I visited that I can actually transact now with my crypto wallet. I went grocery shopping in Europe and I didn't use any euros. I didn't use any American dollars. I didn't use my Visa card. I didn't use my MasterCard. I actually was transacting with my crypto wallet and buying groceries. So this has been around for years. And will it become more mainstream? Time will tell. But you can see that how the US dollar is shifting right now. So we have the Federal Reserve notes, the old school notes, old school paper, the ones that my dad uses. He refuses to use credit cards and crypto. You'll always see him with some $10, $20 in his pocket spending cash. Then there's the digital payments and cryptocurrencies. Maybe we're going to see more and more and more crypto in the next few years to come. It's new. It's a baby. It's a new technology. Like I said, the US dollar, the paper money has been around for 200, 300, 400 years. Visa payments, and these have been around for a little bit, and this is a young industry, cryptocurrency, just getting started. So it's good time to learn all about cryptos, guys. And then there's obviously symbols and codes for everything we do. The symbol, you guys all know this symbol, the $sign, and then the ISO code is the USD. So when you're trading Forex pairs, USD, JPY, GBP, CAD, CHF, EUR, like these are all their ISO codes. Make sure you guys are familiar with the ISO codes and how they're paired, and there's a host and a base currency. So USD, whenever you're trading USD, you probably see USD JPY. GBP USD. So then you got to know which one is the host currency, which one is the base currency. You'll learn that in your Forex basics. Okay, guys? So there is symbols and codes. For Bitcoin, it's BTC, things like that. So those are the codes. Importance of the US dollar in global trade. So number one, it's a reserve currency. So if you can take anything from today's webinar, make sure you please understand that US dollar is the world's reserve currency, no matter where you are in the world. If you live in Africa, if you live in Europe, if you live in Asia, North America, anywhere, if you live in Antarctica right now, the world's reserve currency at this time is the US dollar. Okay, will it stay like that? I don't know. But as of now, time of this recording, it is the US dollar. The USD is the world's dominant reserve currency, with many countries holding it in their foreign exchange reserves. So a lot of countries, every country possibly around the world. There might be one or two that don't. I don't know the statistics, but I'm pretty sure that 98% of the countries around the world have some USD in their foreign exchange reserves. Why? Because it could be a hedge in case their currency is not strong. Then they always have a little bit of a backup with the US dollar. Okay, so just like us, I live in Canada. I don't just hold and hoard Canadian dollars. You can see how it's depreciating. The Canadian dollar is really, really low, historic lows right now. It's like trading at 70 cents to the US dollar. It might even go down to 68, 69 cents in the next few weeks with this 50 basis point rate cut. So I'm not going to just hold just Canadian dollars. I like to diversify and hedge just in case the the Canadian dollar starts to get weaker and weaker. I wanna hold a little bit of US dollars just in case. So you can see how my currency where I live is getting really weak. So I like to have in my reserve some US dollars. So this status provides the United States with significant economic advantages, including lower borrowing costs. So you can see how the US can strategically use this to their advantage with trade, with borrowing costs, with lending, and things like that. So it makes them a big player around the world. So reserve currency. And still to this day, right now, in today's economy, with everything that's going on, it is still the world's reserve currency. Will that change in the next 10, 20, 30 years? Again, we'll do a webinar in the next 10, 20, 30 years together, and we'll see what is the next big currency around the world that might take a little bit of spotlight away from the US dollar. Anybody know? Anyone want to take a guess? I know someone knows it. Come on. Let's go, guys. Who's got it? What currency could possibly take a little bit of spotlight away from the US dollar in the next 10, 20, 30 years? Chinese yuan? Yummy? Possibly. Not the one I was looking for. I was looking for, think a little more. Yummy, you got it. You got a piece of it. You got it. Bitcoin? Yeah, I don't want to say Bitcoin, but yes, I believe in Bitcoin as well. Not what I'm looking for. I was looking, guys, wow, nobody got it. No one's taking guesses. BRICS currency. That's BRICS. Brazil, Russia, India, China, India, and South Africa. They are strategically selling their reserve currency in the US dollars because they want to do trade specifically between those countries together and try and compete with the US dollar. Time will tell. Well, whether that's a good strategy, whether it will backfire, we'll see, guys. Like that's why and it didn't just start like the last few years. If you see BRICS, it's kind of started in 2014, so it's been around for 10 plus years. It's just maybe more people are hearing about it now as of late. It's more in the news. But will it be a good thing? Will it be a bad thing? Is it risky on their part, on those countries to do this? I don't know. We'll see, guys, how everything plays out. But yeah, BRICS currencies. So that's Brazil, Russia, India, China, South Africa, and there is also like another S, it's Saudi Arabia. And then they also have 40 nations that have applied to use and be part of this BRICS system. So we will see. And they want to back it with with gold. So that's something that might set them apart from the US dollar currently. They might back it by gold. So that's just speculation from me. I'm a speculator in the markets. I'm someone that just reads news, absorbs, and go day to day. So it's good stuff to learn, guys. So currency for trade. So a substantial portion of international trade is conducted in US dollars. particularly in commodities like oil. So a lot of you guys trade crude oil on a daily basis. A lot of you guys trade gold on a daily basis. Add silver in there. You know, if you want to add your smaller metals, you can, but gold is your big one, silver is your big one, and other essential goods. This is often referred to as the dollar dominated trade. Okay, so everything basically is traded with the US dollar. Big commodities like crude oil and gold, okay, and other essential goods. So that gives the US dollar a strategic advantage. And its third is its impact on exchange rates. So what is another event that's happening next week? What is it called? So let's put everything together. I know you guys know this, okay? So but Ron is just trying to get your brains operating here. What is happening next week, December 18 at 2 p.m. Eastern? Something to do with exchange rates, and specifically will affect the US dollar, what we're talking about. Canada had theirs released this morning, and next week will be the US FOMC. Okay, so you guys know what the FOMC is. It's a big formal event where Powell comes to the podium, announces, will the US decrease interest rates? Will they increase interest rates, or will they pause? And this is a very important FOMC. It's the last one of 2024, the last one of this year. We'll get a new one going into 2025. There's only 8 FOMCs per year, so it's pretty significant, these events. It creates a lot of volatility across the board in the markets. So it's fun trading these on the lower time frames, but it can be very detrimental to your accounts if you over leverage, if you high risk. You could lose all your money, you could get margin called, you could blow up accounts, you could lose prop firms, all of these things. So it is very volatile, but even if you decide not to trade it, it's good to see what's going on. Why did they decrease, increase, or pause? How does it affect the US dollar and everything else it trades against? So that's happening next week, guys. I believe it's December 18 at 2 p.m. Eastern. Okay, so the impact on exchange rates. The US dollar influences the exchange rates of other currencies. So Bank of Canada this morning decreasing 50 basis points. I don't think it was just a sole factor on Canada. I also think that the US dollar played a role in this decision. So it has a little bit of impact. So it affects how countries trade with each other. So Canada trades with the US on a daily basis. So this will impact the way how we trade. It might make it a little bit more we can trade with the US, offer them more of our products at a reduced cost, to increase trade, but still we don't get a lot in return. So we'll see how that continues. And Trump is also threatening Mexico and Canada, their trading partners, their neighbors, with 25% tariffs on top of everything. So we'll see how that plays out, if it in fact plays out. So a strong US dollar makes imports cheaper for US consumers, but may harm US exports by making them more expensive for foreign buyers. So let me just repeat this. So a strong US dollar makes imports cheaper for the US. So just using that American-Canadian trade right there. So a strong US dollar makes imports from Canada cheaper for the US consumers, but may harm US exports by making them more expensive for foreign buyers. So it's kind of like a double-edged sword here. That what could happen with exchange rates and things like that. So we will see next week what the US does with their exchange rates, how it will affect the US dollar, and we'll go from there. Okay, so implications of the US dollar's status. So there's economic power. Okay, so the US dollar's status as the primary currency for global transactions enhances the economic power of the United States, allowing it to impose financial sanctions more effectively on other nations. So they have. US has has imposed financial sanctions on some countries around the world. So they have the power to do this. Why? Because they're the most powerful currency around the world. They have economic power and they can do these things. So number two, we have global interest rates. U.S. Federal Reserve monetary policy impacts global interest rates. So they in fact impact the entire world. So when U.S. makes a move on their interest rates, it impacts the entire global interest rates everywhere around the world. If you live in Japan, if you live in China, if you live in Germany, if you live in Canada, if you wherever you live around the world, it makes a global. It's like a tidal wave. When the U.S. makes a move, it impacts the entire world. When the Fed raises interest rates, they have been raising in the past few years. It can attract foreign capital, causing global capital flows to shift and impacting investment in emerging markets. So we've seen that when the U.S. started to increase their interest rates in the last couple years, we saw a lot of flow go into Europe and start to stimulate the European markets. Now, if the U.S. is starting to decrease their interest rates, we might see that money supply, that money flow leaving Europe and entering the US. It's kind of they're moving capital. Sometimes when you make a good trade, you make profit, and then when something kind of is at a discount or is at a good buy, you sometimes move your profit from one trade to the next trade, hoping to make more profit. So the interest rates are the same thing with local currencies and global currencies. So the whole world trades like this. So you got to watch kind of inflow and outflow around the world, and always think in the back of your head. Where's the money? Where's the money flowing? Where is it moving? Is it moving from the US into Europe? Is it moving into Asia? Is it coming out of Asia and going into Europe? Is it moving back into the US? Is it coming out of gold and they're taking it out of commodities and putting it into the stock market? Is the stock market selling off? And where's that money going? So if we start to see in 2025, for example, if the stock market starts to sell, you got to think that there is some profit taking. So there is some individuals or institutions or banks or that made some profit, and now they're looking to move their profit into something that's at a good, reasonable buy. So just like us, when we look for discount buys on certain securities, like when Tesla sold off, it was a good opportunity to look at it. When Apple took a little bit of a discount, was a good opportunity to look at. Nvidia, we talk about this a lot. Nvidia in August, when it dropped below $100, $92 and $94 specifically, was a good time, we were telling you, to look to start a position. And since then, it's moved to all-time high. So there's always opportunity. It can be in the stock market, it can be in commodities market, it can be in bond market, it can be in the crypto market. Like crypto, also Bitcoin, if you guys remember, not too long ago, Bitcoin was trading at $16,000, and now, as I'm speaking right now, it's almost at $101,000. So there was opportunity for everyone, and if you missed it, there will be more opportunities available every single day, every single candlestick. There's an opportunity available for buyers and sellers. It just takes patience and discipline. And you can kind of figure out what you want to trade in these markets. So the markets are endless, guys. There's a lot to learn. But what I suggest is learning something more specific and honing that skill and becoming a master of it. So if you like to trade gold, learn as much as you can about gold. Learn how it trades in London. Learn how it trades in Tokyo. Learn how it trades in COMEX. Learn how it trades in post New York. Backtest the way how it gets affected by red folder news. All of these things. Macroeconomics. There's wars going on around the world. That affects the price of gold. There might be we might finally see peace around the world. That will affect the price of gold. All of these things, guys. So there's more and more involved in trading, and then you can kind of think: do I want to intraday trade the markets? Do I want to swing trade the markets? Do I want to invest long term into these markets? Which security should I be maybe scalping or swing trading? Which security should I be thinking of more long term outlook? How should I be diversifying my portfolio? Do I have just like a portfolio just for some small time trading, to pay the groceries, pay the bills, or do I have more of a long-term outlook? Should I be investing and looking at long-term assets and things like that? So there's lots to learn, guys. Lots to learn. It's a lot that you can learn in these markets. So third, inflation and exchange rate risk. So I know today we had CPI data come out. Okay, so that has to do with inflation. There's core CPI. That excludes food and energy. Then there's the regular CPI. There's month over month. There's year over year. So there's targets that there's a forecast. There's a previous. There's the actual numbers that come out. So there's a lot to learn. So inflation, exchange rate risk. Fluctuations in the value of the US dollar can lead to inflationary pressures. We're seeing that wherever you live around the world. Right now, you're feeling the effects of inflation. The last year, I guarantee you, if you've gone to the grocery store, you've felt it. You've seen the cost of pretty much everything, that your staples that you buy, your cheese, your eggs, your milk, your meat. Those things have basically doubled in price, and it's not because the supply and demand of eggs is just the price of the US dollar, and the purchasing power of your local currency is losing value due to printing and creating more and more of this currency, and it's losing its purchasing power over time. That's what causes prices to increase. Okay, so particularly those that depend on imported goods priced in US dollar. So there is some countries that import a lot of things priced in US dollars. They're feeling the effects of this. Countries with weaker currencies may struggle to maintain stable prices. So here in Canada, we're struggling here in Canada to maintain stable prices, and we're seeing the effects of it. Well, at least I'm seeing the effects of it here. When I go to the grocery store. So fourth, diverse economic strategies. Many countries and trading blocs work to establish alternative currencies for international trade to reduce reliance on the US dollar, promoting trade in their own currencies or exploring digital currencies. So we already spoke about this. So there's other countries around the world who are trying an alternative currency and maybe trying to rely less on the US dollar and move away from it. We talked about it. The BRICS currency was one example. Brazil, Russia, India, China, South Africa, and Saudi Arabia in there. Yemi said the Chinese yuan. He is absolutely correct about that too. So the Chinese are also looking for alternative ways to move a little bit away from the US dollar and rely less on it and be more dependent on their own currency. So it may be a way to hedge away from the US dollar. There's pros and there's cons about that strategy as well. And then we also have exploring digital currencies. So there is countries right now exploring digital currencies. There is one country in the world that's made Bitcoin a legal tender. El Salvador has made it legal tender. So it's one country, but has made it for the past couple of years. Will there be more countries following? Possibly. It's a risk that they're taking on, but we'll see. Time will tell if it's a good strategy, if it's a bad strategy. I don't think they're going all in on that strategy, but trying it out, testing the waters. You know, like a feeler trade, when I say, you know, guys, maybe if you're speculating, you're not 100%, you want to get your feet wet, maybe that country is getting their feet wet with Bitcoin and testing the waters. You never know, guys. So I respect countries that can do that, and not just rely on the US dollar and move and think outside of the box. I have a lot of respect for any individual that does that, and countries too. So it's good to see things like that. And then we have geopolitical dynamics. The US dollar's dominance can lead to geopolitical tensions, as nations that feel disadvantaged may seek to create or promote alternative systems or currencies, such as China's yuan or the European Union's euro. So, Yemi, my man, you are absolutely correct about that. So you see, guys, China's yuan and the European Union's euro might be leading to geopolitical tensions around those nations, around those countries, and they might be looking to promote alternative systems so not just relying heavily on the US dollar. You guys got to understand that too. You guys as investors or traders too, your portfolio should not, this is my personal opinion, guys, and I'm a nobody. So I'm just saying, you should not have all your eggs in one basket. Like if you have 100% of your assets and cash or investments all in the US dollar, you might want to look to kind of diversify that a little bit. I'm not saying the entire portfolio, but a certain percentage, maybe start to diversify, just because of geopolitical tensions that might have around, and look for other alternatives. That's diversifying, or hedging against that particular currency that you're holding. So don't leave, guys. This is just a conclusion for the USD, because now we're going to get real interesting. We're going to learn about the DXY. So please don't leave, guys. The webinar is just getting started. So the United States dollar remains a linchpin of the global economy, influencing trade, finance, and politics worldwide. We're seeing that live right now around the world. All the politics, all of the bullshit that brings, is geared towards this thing that we call the US dollar. Its role as the leading reserve currency facilitates international trade and investments, but also places the US in a position of significant economic power. Okay, so you can be a bully if you have economic power. You can push other nations. You can, when you're trading, you can kind of be the bully in the trade, and things like that, because they have the economic power right now, currently as I'm speaking. So as global economic dynamics evolve, the US dollar supremacy may face challenges, but its implications will continue to play a critical role in shaping global trade and economic relationships. So that was our part one of this webinar. That was all on the US dollar. So now that our brains are learning a little bit more about the US dollar, let's learn now what is DXY. So do most of you guys know what the DXY is? Some of you guys have seen it on a chart, and maybe do you specifically know exactly what it is and what it consists of, and what its importance is when you're looking at it on a chart. So let's learn exactly what this is, because I'm going to tell you where retail traders make mistakes here. When they see DXY, they think it's specifically just the strength of the US dollar alone. It's actually an index, a basket case of the US dollar's strength and weakness against the other major currencies of the world. So I know you guys all know this, but there is some traders who just think it's just about the US dollar, and it's not. Okay, so let's just now introduce what this is and why it's important. So the DXY, or the US dollar index, is a measure of the value of the US dollar relative to a basket of foreign currencies. And those are the major currencies. We have major currencies, we have minor currencies, and then we have exotics. Okay, so we're not talking about the exotics, we're not talking about the minors, we're talking about the majors. Can anyone list the majors? What are there? There's a few of them. Let's list them all together as a group. What are the major currencies that the US dollar trades against? or it's correlated against? What is it, guys? Come on. I can't be the only one here. Let's go. Lorraine, we got EU, euro, you're correct. We got the JPY, Japanese yen, you are correct. We got GBP, we got the British pound, you are correct. Okay, yeah, the loonie, yep. The weak Canadian dollar, yes, we got it. What else, guys? Come on, YouTube, let's go, guys. We're missing just a few more. Yummy. Australian dollar, New Zealand dollar, yes. And one more, guys. Is there one more? Swiss franc. And can anyone get, I think the last one, Swedish krona? Is it the Swedish krona? We'll take a look. Let's take a look. Nope. We'll see. Okay, not a major. We'll see what it is here. Okay. Okay, so it serves as an important indicator. Okay, we all like indicators. Relative strength index, RSI, is a strength indicator. MACD is a trend indicator. EMAs, SMAs are exponential moving averages, average indicators. Some of you guys use Bollinger Bands. That's an indicator. So also, the DXY is also an important indicator in trading. So it serves as an important indicator of the dollar's strength or weakness against those other currencies, those major currencies that we just listed. And it is widely used in the financial markets. Okay, so here's a detailed breakdown of DXY and its key components. So what we're going to talk about is the overview of DXY. We'll talk about a definition and, again, history. It's not a history class. I'm not going to keep you here for hours and hours, but it's good to learn when did this DXY come into play, how long has it been, and what does it consist of. So remember the question I started the call with? When I said out of those major currencies, which one of those holds the heaviest weight against the US dollar? And we'll see who got it. We'll see who is correct. Okay. So definition, the DXY measures, and pay attention to this part because I know you guys know this, but some of you guys make a mistake on this from time to time. So the DXY measures the value of the US dollar against a basket of the 6 major world currencies. It reflects the performance of the dollar in the foreign exchange market and provides insights into overall economic trends. Okay, so we like indicators, we like trends. This can tell us if the DXY is moving very bullish, what is that telling us? That's not just telling us that the US dollar is relatively strong, it's telling us that the US dollar is relatively strong against all 6 major currencies around the world. So that's significant. That's a good clue. So it's not just specific to the US dollar. It's not just if the DXY is moving up, that doesn't just mean that the US dollar is strong against the Canadian dollar and has nothing to do with the euro or the British pound. It's a whole basket case. So if the DXY is moving bearish, that's telling me that the US dollar is losing its strength against all of those other major currencies. So those are the ones I could be looking to trade. I could be looking to buy the euro. I could be looking to buy the pounds. I could be looking to buy the Swiss franc or the Canadian dollar. Now what I can do is, think about this, guys. I could take all of those major currencies and I could pair them against each other and see which one is stronger. So you know when we have minors, okay, you know when, okay, let me just use this example, guys. Okay, the US dollar, DXY, is bearish. So what is that telling us? That's telling us that the US dollar is weak right now compared to those other 6 major currencies, correct? So what I could do is, if I like to trade, I want to narrow it down just to the euro and the British pound. Now what I can do is, a minor pair is when you pair those and you're not including the US dollar. So you can look to trade the euro GBP, the euro pound. That's a minor pair. So what I could do is, if I know that the US dollar is weak, the DXY is weak. I know it is compared with those other 6 major currencies, but those other 6 major currencies have strength and weakness on their own. So what I can do is, now I don't want to confuse you guys, so just pay attention to what I'm saying here. Now I can get a chart with the euro pound, and I can take a look at those specific 2 currencies, and the euro will be stronger or weaker than the pound. And that's how I can maybe figure out which one I want to trade against the US dollar. So if I'm buying one, I want to buy either the euro or pound, which is stronger. So I take a look at the euro GBP chart. Does this make sense, guys? Or do you want me to repeat what I just said? I know it might be confusing. Maybe I'm making it confusing when it shouldn't be. I'm trying to just relay just an easy point, what I'm trying to say here. But I know it might be confusing. If it's confusing, guys, I'll repeat it. But I know when we don't see it on a chart, it makes things difficult because all we're seeing is Ron talking on a PowerPoint presentation. But this is the theory I wanted to teach. We want to learn theory first, and then we'll go practical and we'll look exactly how it looks on the charts with candlesticks, and then I can talk all about it. Okay. So, okay, let's just go over to a chart right now, real quick. I was going to save the charts till a little bit, a couple more slides, but let me just show you right now what I mean. Let's just go to TradingView real quick. Just one moment. Okay, so I'm going to go to TradingView. This is the DXY. Okay, so are we all clear on this? This is DXY, right? And I'm on a daily time frame. Okay, so this is showing me the strength of US dollar compared to all of our other 6 major currencies, right? So you guys got that part. That's easy. So as of right here, end of September, the DXY bottomed out at a nice psychological area. Look at it, 100.25. Remember, Ron talks a lot about these psychological zones, how the market trades at these psychological blocks in the market. These numbers, they repeat themselves over and over. So learn psychology too in the market. See how it's 100. Look at Bitcoin. Bitcoin is trading right around 100,000. It's at that psychological block. It's peaked its head up at 104 and came back down to 94. It went back up to 102, came back down to 96, and now as I'm trading, it's at 100,000. 420 right now. So I think we all got to go smoke a joint right now. And what is going on with this DXY is it's making higher highs, higher lows. Higher high, maybe a new higher low coming back up this week. So this is telling me right now the US dollar is relatively strong against those other major currencies. Now what I can do is, if I want to trade, I want to figure out the euro or the pound, which one to maybe trade, or which one is weaker against the specific US dollar. Now what I can do is I go to my chart and then I take a look at that specific pair. So I go to, I'll just do it with you guys. Let's go to Forex, and then we'll look at the euro pound, or so the euro, sorry. Okay, so Euro GBP. Now let's bring it up and take a look at it. Okay, so now what I'm looking at now is I'm not looking at the US dollar now. So now we're looking at the euro paired with the British pound. What do you guys see on the daily? You guys tell me, what do you see? What is it? Is this particular pair, is it, do you see it's bullish or bearish? Has it broken some critical areas, zones in the market? Bearish. Yeah, it's not I'm not trying to trick you guys, but it's what is moving bearish right now? What is weaker? What's going to the downside? Mr. Andy, California, good. It's moving to the downside. What is moving to the downside? What would, if you were trading this, what would you be? So which one is weaker? So the euro is weaker, right? So if the euro, so if I was picking which one do I want to pair against that strong DXY, I know that the US dollar specifically is strong against the 6 total major currencies, but now I want to narrow it down, and I like to trade euro and the pound as opposed to trading the Canadian dollar and the Swiss franc and the Australian dollar in New Zealand. I put some focus on this. I can see right now that the euro is weaker than the pound. So then I go to my chart, US dollar, euro USD, right? We go to the euro USD because that's the one we chose. So let's look at the euro USD. And what would we be looking to do with the euro USD? You can see how we've had a 4-day downtrend over here, starting Friday, December 6th, moving into Monday of this week, Tuesday, we're moving into Wednesday. We've got a little bit of a support being created right around here at this price. Is it holding? Could this be maybe a good time to maybe look for a swing position trade on the euro USD? Would it be time now that we could see some momentum going to the upside, or do you think it would break this and close below and we drop even further to the downside? So now you got to specifically, you're looking at the euro USD. You've kind of taken out of the equation the pound, because the euro is the weaker one. So should we start to look to buy the dollar and maybe look for it to break through this weekly resistance and start to move its way up? And then right now you can see it's just kind of consolidating. The last few weeks it's just kind of consolidating here. It's kind of just a way how to narrow it down to figure out which specific security has its own strength, which one has its weakness, how to kind of eliminate which one you don't want to trade, which one you want to trade. It's kind of a process of elimination, right, guys? This is kind of you're eliminating your opponents. You're eliminating your competition. If I want to buy the US dollar, I don't want to buy it against a strong pound. I want to buy the US dollar against a weak euro, because that's where you can probably make more gains. If I'm trading a strong US dollar and a strong pound, it might just be consolidating. There might be no significant move. So do you guys understand what I mean by that? It's kind of like a process of elimination. And you can do this for any pair, any security, whatever you feel comfortable trading. Okay, and obviously use your technicals, wait for price action, to do something at these levels. But every time I see this pair trading down here, it's getting rejected, going back up, but then it comes back down in the green box again, going back up, but then they pin it right back down, and now it's could be starting again, some green momentum to continue to break out of here. Okay, so that was just off topic. I wanted to show you guys. Let's just go back to our webinar now. Sorry guys. Let's just see where we're at here. Okay, so we're just going to continue here. Okay, so this was all from this one, the definition. So the DXY measures the value of the US dollar against the basket of the 6 major world currencies. Check mark, we talked about that. It reflects the performance of the dollar in the foreign exchange market and provides insights into overall economic trends. Okay, so always look for trends in the market. That's good. The trend is your friend. Try and trade with the trend as much as you can. It makes trading easier. History. Let's talk a little bit about the DXY. When was it introduced? It was introduced in 1973. So prior to 1973, there was no DXY. There was no gauge to see how the US dollar was performing against these other major currencies of the world, because at that time it wasn't really identified that the euro, the pound, the Swiss franc, the Canadian were the major currencies. There was prior to this, all currencies were equal. There was no really deciphering which was majors, which was minors, which were exotics. So in 1973, they said, let's introduce the DXY. And shortly after, the US transitioned away from the gold standard. So if you remember your history, 1971, US dollar got off of the gold standard. Up until 1971, the US dollar was backed by gold. President Nixon came in 1971 and said, I'm going to remove the US dollar off of the gold standard. And then 2 years later, the DXY was introduced. It initially had a base value of 100. So you know when we're trading at that psychological 100, that's that base value. That's why I always tell you guys, pay attention to these psychological levels, because it's coming to a base. It's coming to a level where things psychological, like right now, Bitcoin, as we're speaking, it's at that 100,000 base. Are we going to hold this 100,000? It's fluctuating up and down from 104, 102 back down to 92. So it's kind of consolidating in there. But if it can start to get a lot of volume closing above 100,000 and making 100,000 the base of support, and then over time maybe the base of demand starts to create there, then 100,000 might be the psychological foundation or the support level for Bitcoin in the next few months, in the next few years. And maybe Bitcoin never comes back below 100,000, just like the US dollar. When we go back to the DXY and we see historically what happened to DXY when it broke that base of 100, where did it go down to? Some of you guys know this. You know the double bottom around 88 cents. You guys remember that. So that was an opportunity to look to buy the US dollar when it got down, double bottomed at 88 cents. Has it gone lower than 88? We'll take a look at the history of the charts when we get back to going back to DXY on the chart. So let's just talk a little bit about it. So changes in the DXY indicate the strengthening or weakening of the dollar from that base level. Okay, so I'm going to repeat this. Guys, this is a good point, so let me repeat it. So the DXY, you know, when we get to that 100 point, it initially had a base value of 100. Changes in the DXY indicate that the strengthening or weakening of the dollar from that base level. So this is when you could look to maybe sell or buy other currencies around the world. Okay, so remember this, guys. The first question when we started the call, how many of you guys got this correct? So components of DXY. What are these 6 major currencies? What is it based against? Over here. So we got the DXY is calculated based on a weighted geometric mean of the following 6 currencies. Okay, so number 1 we have Euro, EUR. Guys, did you guys know this? That the DXY, the euro, holds approximately 58% of the weight. Did you guys know this? Anybody know this, or is this something we learned tonight? 58% of that DXY is the euro. Okay, so that's why a lot of institutions, hedge funds, banks, you and I, retail traders, it's a very technical pair to trade the Euro USD, because you can see it's about 58% of that entire, of these major currencies, 58% of is the Euro. Did you guys know this, or did anybody know this? I find this fascinating. 58% is the Euro. And then when we break it down a little further, you got the Japanese yen, JPY, approximately 14% of that weight. The British pound, I would, you know, most people would think the pound is stronger, holds more weight here. You probably knew that 100%. Rich, first time ever you heard that? Okay. Rich, you made my night. Someone learned something new tonight. So as long as one person learns something new on every webinar, I'm happy. So it makes it worthwhile. The British pound, 12%. I'm just estimating over here. Canadian dollar. This is probably going to go down a little lower because I haven't updated this since the 50 basis point cut. But Canadian dollar holds less than 10% of that weight, 9.1. Swedish krona, 4.2%. Swiss franc, 3.6. And then you have your Australian dollar, New Zealand dollar, a little lower. Okay, so you can see how which currencies are really insignificant compared on that entire basket case. So that's why when you see the relative strength of DXY, 60% of it approximately is based on the euro. Okay, so you know when you see it's very, very strong, the DXY, it really doesn't mean much against the Swiss franc. It really doesn't mean much against Swedish krona. It really doesn't mean too much against the Canadian dollar. It's really how it's performing against the euro. So when I learned this, I found this fascinating. It really changed the game for me when I was trading Forex. So guys, it's important to learn this stuff because this might change your the way how you go about Forex now, the way you navigate, what you look at. So everyone asks me, Ron, why don't you trade USD Canadian dollar? You live in Canada. America's your neighbor. You know a lot about the US dollar. You know about the Canadian dollar. Why don't you trade these two? It's like a perfect marriage. And I avoid trading USD CAD as much as I can. I absolutely hate trading this pair. Why? Because it only is like 9.1% weight against that entire DXY. It's very insignificant. I do like to buy at historic levels. Like if you remember the early 2000s when it was par, when the US dollar and Canadian dollar were 1 for 1, that's when I bought a lot at that time. And then it went right back up to $1.30, $1.40, and that's when I sold. That was like an investment. That was more of a swing investment. I look for those opportunities always. If something comes back to par, like do you guys remember pandemic levels when the British pound and the euro came to par with the US dollar? That was an opportunity to look for long buys, and since then it hasn't really retraced back. I know a lot of guys in our group that took advantage of that time. There will always be opportunities, guys, but make sure you know what you're basing your levels off of. Okay, so the DXY is a powerful indicator, but when you know what it's comprised of, when you know the components, then it kind of changes what you're looking at. So take out of this webinar that the euro represents approximately almost 60% of that entire DXY. When you're looking at that, how it's correlated, that's where you're getting that from. Okay, so you know when you're correlating DXY when you're trading gold. Okay, a lot of traders think they put a gold chart and DXY and they kind of do the opposite. So if the DXY is going down, they automatically assume gold is going to go up. If the DXY is going up, automatically assume that gold is going to go down. That's not the case. Okay, that's not the case. So now you know if the DXY is going down, think now, why would gold be going up? It's because all of these other major currencies are kind of depreciating against the US dollar, and maybe they're looking to hedge that depreciation into an asset, a precious metal that stores value, that has some type of significance, stored value. So when there's uncertainty, when there's tension around the world, when there's speculation, when there's wars and things like that, do you want to hold your local currency, or do you want to kind of move it into something that is seen as a store of value or a safe haven? So there's crude oil, there's commodities, there's gold, there's silver. Right now, these days, we're starting to see Bitcoin, seen as a digital stored value. So there's a lot to learn, guys. It might open up a little bit after this webinar and give you something to think about. Okay, so the euro has the largest weight in the index. We can see it right there, 57.6%, reflecting its significance as a counterpart to the US dollar in global trade. So that's very important too. So let's not just talk about how important the US dollar is and, it controls everything around the world. The euro also, 60% of that weight is the euro. So the euro sees a lot of trade, a lot of liquidity, a lot of money flow in there. Okay, so in my opinion, when you're trading Forex, if you're a beginner or an intermediate or you're an advanced trader, I don't know what level you're at, but somewhere you fall in between those three. Some of you guys are beginners, some of you guys are more intermediate, and some of you guys are advanced traders. I understand that, and all the best to everybody here. But if you want to trade a Forex pair, look at the Euro USD. Take a look at it, backtest it. It's a very technical pair. It's not heavily manipulated because a lot of world's currencies and money flow go into those two. It's a really, really good Forex pair to trade. Doesn't have too much volatility, and it can make consistent profits if you go about this the right way. So take a look. If some of you guys are not trading the Euro USD as of late, take take a look at it after the call. Go back, do a nice thorough top-down analysis. Start off on the monthly, see how it's moving. Go back to your historic times. Go back to COVID, when everything started in COVID, and see how it was trading. Then bring it down to weekly, daily, and then if you're an intraday trader, have a look at how it trades on the hourly, 15-minute. If you like to scalp it, take a look at it. Okay. If I was a beginner, that's definitely where I would begin, with the Euro USD Forex pair. Okay. So the calculation of the DXY. The DXY is calculated by taking the weighted geometric mean of the exchange rates of the US dollar against the 6 currencies in the basket. So I know it sounds very mathematical here, very confusing, but the DXY is calculated by taking the weighted geometric mean, so that's the average, of the exchange rates of the US dollar against the 6 currencies in that basket. Okay, so what are the implications of the DXY? It's used as an economic indicator. Okay, so you can use this now and add it to your toolbox. You can use this as an indicator to know the strength of the US dollar compared to all of the other currencies. And then what you can do with those currencies is you can do what I do, you can take the euro pound, you can figure out, is the euro stronger than the pound? Is it weaker than the pound? So you can you can kind of narrow it down, process of elimination. It has a market influence, and it's also interest rates and inflation. So we're going to see next week, US is set for their next FOMC session, where they're going to discuss increasing, decreasing, or pausing the interest rates. There's a lot of factors that play into that. It also looks at the labor market. It also looks at inflation, all of those things. Okay, so we'll see next week what the move is, and that's the last interest rate move for 2024 going into next year. And also risk assessment. Okay, so there's implications for the DXY as an indicator, market influence, interest rates and inflation, and risk assessment. So I'm going to just talk now a little bit about those. So number one, as an economic indicator, investors and economists use the DXY as an economic indicator to gauge the strength of the US dollar in comparison to other major currencies. So just bringing all the pieces of the puzzle together, what we talked about, this is an economic indicator for most economists, for investors. A rising DXY, so a bullish DXY, typically indicates a stronger dollar. And again, typically, it doesn't always indicate a stronger dollar. It typically indicates a stronger dollar and may suggest a stronger US economy. Okay, so understand, typically and may. Nothing is guaranteed. So just because you see the DXY going up, that doesn't mean that everything else is weak or selling. Okay, it might just mean if the DXY is rising, maybe the euro is really weak. Remember, because it holds 60% of that weight. Does that make sense, guys? So you want to maybe focus what's going on with the euro. If the DXY is rising, it has to have something to do with the euro, because the euro represents 60%. It's comprised 60% of that. So that's why, like if I see the DXY rising, it's only 3% of the Swedish krona. So would I really dial into that? No, it's very insignificant. I would really want to see what's going on with the euro. There could be some news in the market about the euro. Something could be happening. Okay. Market influence. So changes in the DXY can influence global financial markets, affecting investment strategies, commodity prices, and the profitability of US exports. For instance, if the DXY rises, again, if DXY is going up or bullish, it often means that commodities priced in US dollars, so there's a lot of commodities right now, as I'm speaking, that are priced in the US dollar. You got crude oil, US oil. It's directly traded against the US dollar. And gold. Some of you guys trade gold. The abbreviation, the ticker number is XAU USD, and may become more expensive for foreign buyers. So again, let me just read this over again. Market influence. Changes in the DXY can influence global financial markets, affecting investment strategies, commodity prices, and the profitability of US exports. For instance, if the DXY is going up, It often means that commodities priced in the US dollar, like oil and gold, may become more expensive for foreign buyers. Okay, so it's good to know these things. Good to know. And then number 3, interest rates and inflation. So movements in the DXY may also reflect expectations regarding U.S. Federal Reserve actions related to interest rates. A stronger dollar can help control inflation by making imports cheaper, while a weaker dollar can stimulate exports. Okay, so we're going to see next week, FOMC, December 18, 2 p.m. Is the U.S. going to increase, decrease those interest rates, or not touch them at all? There's going to be a pause. But a stronger dollar can help control inflation by making imports cheaper. So, when we see, when we talk about how will it directly affect the US dollar, if interest rates go down, that might stimulate more and more money coming into the US through imports, through investments, while a weaker dollar can stimulate exports. So a lot we'll see next week. Finally, risk assessment. So traders and investors monitor the DXY as part of their risk assessment strategy. So some of you guys are getting better and better and better with your own risk assessment plan, your own personal risk assessment strategies, and your personal risk management. You guys need to manage your own risk. You guys need to be your own risk manager in these markets. And if you have a good solid foundation of good risk management, then over time you will become more profitable in these markets. If you have no sense of risk management, you're gambling in these markets, and you're probably figuring out that you cannot figure out how to get consistent in these markets, because you have good days and then you have more bad days, and then you have another good day and then you give everything back, and you're in that vicious cycle that you can't get out of. So at some point, guys, even if you're struggling right now, you're going to have to really take risk management serious if you want to take your trading to the next level. I know doesn't sound the best. Not a lot of people don't care about risk management, but if you really want to be successful at this for over time, so I'm not talking about just making money for a day, tomorrow, or a week. I'm talking about if you want to really be good at trading or investing for over a year, for maybe 5 years, 10 years. I know some of you guys want to do this for the rest of your life. You got to really, really take risk management serious. And I know a lot of you guys have really, really told me this year, my main thing was going to be risk management. So I'm going to talk about to those traders going into the new year. I want to know the honest truth. Are you guys really doing well this year? Your risk management, has it improved? Or, because we're almost getting to a new year. So, New Year's resolutions, we got to start to fix a few things, guys, going into the new year, so that we can have a really, really good year, 2025. So a sharp increase or decrease can reflect broader market sentiment about economic stability and investment conditions in the US. So don't leave, guys. I'm just concluding this presentation, but we're going to move to the charts, and I just want to show you 5 more minutes about those historic times on the DXY, where we can see how it was trading relative to all of those other major currencies, starting in 1973, and the euro holding about 60% of that weight. So the DXY is a critical financial tool for understanding the performance of the US dollar against a select group of major currencies. We talked all about that. So this should be now in your brain and good to go. So when we talk next week, guys, I'm going to bring up the DXY chart. We all know what it is, and then we don't have to keep asking questions. We know exactly what it is, what it's comprised of, what holds more weight in it, and it's easy conversation we can have. So by providing a benchmark for the dollar's relative strength, the DXY has significant implications across global trade and investment strategies. Understanding the DXY helps market participants make informed decisions and navigate the complex dynamics of the foreign exchange market. Okay, guys? So don't leave me. I know it says thank you for attending. Don't leave, because right now, just for 5 more minutes, give me 5 more minutes, guys. We're going to go to the charts, okay? So what I want to do is go back to DXY. If you guys want to bring up the charts as well, you guys are more than happy. Otherwise, I'll do it for us, okay? So I'm on DXY. I'm going to get up the daily. I want to go and look back. I want to go back. Let's go to the monthly, okay? So let's just take a look at, so you guys remember now, we're on DXY chart. So you guys know what this is now. I don't have to keep repeating myself. So you can kind of see, remember, when did it kind of come into play? We said 1973. Okay, so 1973 is right here, trading at 110. Remember, the benchmark was kind of 100. So then look here in the 1980s. I was born 82. Okay, so I was part of this. I was part of this bullish run up. This was when I was born, 82. I was buying it when I was born. I knew all about this. So no, I'm just playing. But there was good support. Okay, just looking at the past, right there, good support. Okay, some of us weren't even born at this time on the call. This was 1979, 1980. Good support right here at 85 cents. So I'm just going to highlight the 100, the psychological 100, and we're going to see what happened at the 100. So I'm just going to draw a purple line at the 100. Okay, so we know exactly what's going on here. I'll make it a little thicker so we can see it. Okay, so the purple line is that psychological 100. You can see here in the 1980s, some historic events happened in the 1980s, and you can see how it was trading, holding around approximately 84 cents. Okay, how it was compared to those other major currencies. And then what happened? Look at the big move, 1982. Okay, we had a lot of news at this time around the world, 1980s, if you remember this time. And look at where it peaked. How high did it get up to? It got up to 164. So when it gets up there, what is that telling me? What is it telling me when it got up there? It's telling me that, remember those other 6 major currencies? Something was happening. Okay, not so much the Swedish krona and the Swiss franc and kind of the Canadian dollar, but the euro. The euro's 60%. So something, guys, if you look back in your history and kind of go back and look at this, maybe you'll understand what happened in 1985. What happened in February of 1985? I know Ron's birthday was February 2nd, 1985. I was 3 years old. That was significant, but the markets, more things happen. And then look at, guys, what goes up? You know, if they didn't pip and dip out of those years, look at their investment came all the way back down in the end of the 1980s, 1988. So if you draw this base of support again, guys, remember the green box, red box does not lie. Kind of look past, predicts the future. So you don't always have to do this on the low time frames. Look at, if you do this on yearly time frame, you can see how it held here. And then if you stretched it into the future and you had a signal and you waited from 1980 and you were really patient and you waited for 8 years and 1988 came back, that money supply came right back into the demand zone and it bounced and came back down. And then you see when it really broke the demand, what happened? They swept the liquidity down there. Okay, remember what we always say, there's pending orders below or above these zones, always. And they can come down and get the money. They did. When did they come down and break the zone? 1992-93. Again, financial impact around the world in the early 90s. Some of you guys remember what happened here. I'll go into an entire call, another webinar where we'll talk about all these historic events. Some of you guys at the top of your head know. You can go back and you remember what happened in the early 90s. I was only 11 to remember this time. I was watching sports, Chicago Bulls, Dallas Cowboys, Toronto Blue Jays, Montreal Canadiens. Those are all of my favorite teams. 1993, they all won championships, and I'm still with those teams. Kind of moved from Bulls because of Michael Jordan to the Raptors. That's just because they're local. But still, sad as it is, I'm still a Cowboys fan and a Montreal Canadiens fan and a Blue Jays fan. And then look at, we came back up, and what did we got up there? Got kind of double top. It came up, back down, came back up, and then the drop. Okay, so you can see now, like, even historic patterns play out. Okay, and what happened? Why this area? 120. Okay, around there, 118, 119, 120. That is where there is resistance. Right there, you can see when it came back up. When? 2001. Did something happen in 2001? Was there like a dot-com era here, 2000s, early 2000s, tech bubble, all of that happened over here? That's when it dropped. Is this a lower high? Yeah, Yemi, have a good night. Thank you for joining. I'm only going a couple more minutes. But remember this historic high? It came pulled the lower high. Okay, it didn't even come back to the peak. And you see where it's where it all kind of started in the early 19 end of 1960s, 70. Again, isn't that like a big head and shoulder? Came right back up to, there's the left shoulder, there's the big head that came out, came back down. Again, it's testing now the right shoulder. Couldn't continue to break above there. Stretch it into the future. Keep going as far as you can. And then it came back down. When? When did we break? 2007, 8. Okay, you guys now should be old enough to remember what happened here. 2008, the US financial crisis. This was when the banks, subprime lending broke. The big short happened. Where did the US dollar drop down to? What is this historic low? 70 cents. Okay, what's down there? Money. Kind of like the impulse breakout back in 2009. They kind of faked out the market, saying like, it's a lot. They trapped a lot of buyers here in 2009. I got kind of trapped in here too. I was playing the markets at this time. Kind of got trapped in here too, but thankfully I didn't risk everything. I was part of that candle right there, that February 2009 candle, that bought and the retest right there. I lost a little bit, but I recovered. But that's when I kind of made some early mistakes. I didn't understand risk management, guys. Didn't understand too much I kept learning the game. But I stuck with it and kept learning, guys. So you can see even years later, still everything I talk about, still, look, I'm showing you guys on the yearly time frame of the DXY, how it came back up, faked out the market, came back. Again, you kind of got it. I don't want to swear here, but you got your FU candle right over here in June of 2010. Market said FU and came right back down. And you can see this box, this level, this zone, you can play it out over years. Okay, if you're one of those investors that likes to invest, keep your yearly, your monthly, like leave your chart like this and just watch the liquidity. Watch right here. Okay, this is when the market started to heat back up. 2014. A lot of things around the world happened in 2014. I don't have enough time to get into this, but right here, September of 2014, we had a big, strong bullish candle break this. This was a red zone. And look at it, closed above there. What candle? Did it come back and test? 50%? Okay. Guys, you guys know the way how I explain things on lives when we're going 1 minutes. Okay. If you want to trade monthly candles and you want to make some long-term profit, look here, guys. Is this an ignited bullish candle with no lower wick? It is. Was the previous month closed at the high with no wick? There's your pop and there's your drive right through that supply zone. It closed 99% right near the high and a small pullback. Did you bring out your Fibonacci tool in 2014 if you cannot see 50% of that candle and go from the bottom to the top and find your zone? Hopefully you guys did. I wish I was teaching you guys this back in the day, because look what you can see here. There's the 0.5. We missed it by just a hair. But if you found your zone, remember what Ron says, a notch above, a notch below, there's your green golden zone. Pending orders waiting. Even monthly orders are piling up. Okay, there's not just scalpers and intraday traders in the markets. There is long-term investors that look at the DXY. Remember, this is the basket case with the major currencies of the world. This is not a Mickey Mouse index. This is a real index, guys. And if you stretch that into the future and keep going, will it ever come back in this zone? Did it ever come back into this zone? That's why backtesting, optimizing is is awesome when you learn this stuff, because it repeats itself on every single time frame, every single day. The volume closed above. Look at the pullback next month, October. Red, 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 right into that pending orders. They grabbed those pending orders, retested that area, and then look at the bullish move from there. 2014, guys, this was an exciting time to be in the markets. Look at the stock market rally at this time in 2014. If you guys don't believe me, look at what securities led the way. And then look at what it did. Did it break this previous double top high like those tweezer tops? Yeah, absolutely did. 92 cents. It broke through it. Where did it get up to? What's the purple line? That psychological 100. It came up there, touched it, rejected back down. Came up 2 times, came back down. It kind of impulsively broke above it in 2017, came all the way back down. Right back down into here, holding. So we still have not came back down into kind of that green pocket. So I still stretch it into the future. If it ever comes back in here, you better believe Ron's looking to buy some US dollar if it ever comes in here. Right now, kind of closed above the 100. When was this? Okay, you guys remember the pandemic, 2020. Remember what I said, that double bottom down there at 88 cents? Right there. Okay, when the pandemic started, you guys know when it started, early 2022, February, March, all those lockdowns, all of that. Okay, here we go. We move into it. Started to move through here. So this is where we're trading at live currently on the monthly candles. There's that big resistance up there. Okay, stretch it into the future. How high did we previously just get up to? This was very recent. Early September of 2022. We got up to 114, 115, but got rejected, came back down. Look at what every time it comes near this 100. Okay, we're holding. I can see a zone there. Okay, you can see the zones now. Was there a big green candle that closed above 100? There was an impulse, came back down. Impulse came back down. Impulse shot. Here we had an official close, April 2022. Grab your Fibonacci. If you cannot see 50% of that, some of you guys will get good at it. And then if you did this, I know it's backtesting, but we do this live like on the 1 minute candles and 5 minutes just to show you how these levels hold. But I want to show you guys, if you want to be an investor and look for long opportunities, you absolutely can. Stretch it into the future. See how many times it came in here. February of 2023, moved back up. Didn't really kind of close above previous resistance to get the next move. Then they swept the liquidity. Again, we pushed back up. Recently, this is October of 2023, last year. Then it came back down. How many times has it been holding in here? The new year, January 2nd, 2024, this year, we saw a stock market rally. DXY was strong. Again, stretched it into the future. We just recently dipped into here, September. This is September 2024. This is a couple months ago. Okay, we were in here. When did we come out? October rally, October 2024. November, continuing. Here's our monthly candle. We still have 19 days to go to close out the year. What is Ron looking at? Is it going to break 108? Will it test maybe 50% of this big red candle? Where's my red zone above there? Grab your Fibonacci from that big red candle from the open to the close. Okay, coming down there. If you can't really see 50%, get your 0.5, your notch above, your notch below, make that red, and drag it into the future. Now I can start to see maybe where it might consolidate or the supply. See the top where we just hit last month? We just tapped right into there and it came back down. Now are we going to fill last month's wick and see if we can, or are they going to push it back down? So let me just get rid of the Fibonacci's and just keep my zones. Okay, you never thought Ron was an investor. I am. I love long-term trades. Holding Apple since 2008. Tesla, been holding a long time. Nvidia, got a good Nvidia shares in Nvidia. I love doing covered call options on all of those securities for passive income. We'll teach all that. But guys, look at now how we're kind of consolidating. DXY. So we did an entire webinar on what is the DXY. Let me just get rid of these so it doesn't confuse you. Okay, So how does that chart look now? This is where I kind of give you the whole inception of DXY since the 1970s and where we are today. So look at how we're are we consolidating? Absolutely. We got a new president coming into the United States. We got a lot going on in Europe right now. There's a lot going on around the world, and right now the US dollar and those six major currencies around the world are kind of consolidating. You got buyers who are accumulating a little bit. You got sellers that are selling. Buyers are accumulating. Remember, guys, we're smart. It's not going to just trade in this consolidated zone forever. At some point, it's going to need to make a move to test up here and see if it can break, or we're going to look to go maybe to the downside, maybe to test back down in here. And for the next few months, we might just be trading up and down in our zone. And we know that buyers are accumulating and sellers are accumulating. But remember, guys, these are not 1 minute candles. These are not 5 minute candles. These are monthly candles, okay? And we're going into a new year. So guys, now I hope you guys enjoyed tonight's webinar. I tried to make it more entertaining because just learning about the US dollar and DXY could be probably boring. So I tried to tie it in with a chart to keep you guys engaged. Guys, I hope you guys learned something new today on tonight's webinar. And let's go get some rest. Let's come back in a couple hours and get ready for live London. So 2:30, 2:45, right before London market open. We'll get into the markets. We'll do a top-down analysis. We'll do DAX. We'll look at the German market for Europe, and maybe we'll do what we were just talking about. Maybe we do USD, Euro USD, maybe gold. Okay, we'll take a look how things are shaping up. We'll do a quick little top-down analysis. We'll do some London hours, and then move into New York. Okay, guys. So. And everyone on YouTube, thank you guys for joining. Pinned at the top of the YouTube channel is our free Telegram channel and all of the promotions we have right now. So guys, in Zoom, thank you guys for joining. I appreciate you guys. I'll see you guys. Let's get a little bit of rest. I'll probably be very tired when I get on the call with you guys, depending if I get a couple hours of sleep. Maybe it's an all-nighter. Who knows? But let's have some fun later tonight. Let me see if I can switch mics. Oh, I hate when this happens. I think it's when I talk too much. It kind of kicks me out. It's kind of telling me enough talking. It's enough. 1 second, guys. 1 second. No audio still on YouTube. You guys can hear me fine on Zoom. YouTube? Okay, it's better on YouTube. Okay, guys, sorry about that. So all I was saying before we had that little chipmunk audio glitch was I was talking about what we learned. So far, going back a couple weeks, we learned about what is trading, investing. We learned about money, what the importance of the US dollar and the DXY, and we're going to take it a little further, guys, in the next few weeks. Then we're going to introduce what is a stock, what is an option, things like that, how to broaden your trading experience in these financial markets. So it's not just you can trade Forex. There's opportunities for anything you want to trade. Okay, guys, but have a good night, everyone. Thanks for your attention. I appreciate everyone. We'll see you guys in a couple hours, live London. It will be on YouTube as well and Zoom. So guys, make sure subscribe, hit the notifications, join us if you guys can, and we'll see you guys in a couple hours. Okay. There is some big news in the markets tomorrow. And we also have Costco earnings after hours tomorrow. Okay. So we'll see you guys in a little bit. Have a good day. Have a good night. Thank you guys.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.